Hey everybody, happy Sunday. We are here and we are live. We have a lot of material to get through. And for those who are new to the channel, hope you like it. This is where we take all the top questions we see every week, we analyze them, and we pick out the most common ones, the most common threads, the most popular items where people have the most questions and confusion and need some edutainment direction, not financial advice, of course. So let's jump in and see what we got today. So first of all, math, money, and freedom. And of course, this is edutainment. So first question of the day. And looks like everybody's back on the proof of work FUD concern. One more time. This is from Hegis. Could proof of work be banned worldwide due to environmental concerns? In your opinion, do you see a future solution trade-off? So there's a whole bunch of stuff happening, but let's address some of the common FUDs that are popping up these days. And there's a guy called Nick Carter who debunked a lot of all of this FUD with the most excellent rebuttal, because the US government is now looking into the dangers because there are some politicians that refuse to get educated or read. Anyway, here are some of the top lists here. Obviously, one of the amazing things about Bitcoin is it uses stranded energy that would otherwise go to waste. It finds the most remote corners of the world and plugs in machines and creates value out of them. Second thing, which is kind of a new release this week or last week, I can't remember, but Intel is creating extremely low power ASIC chips. So they are investing heavily in doing this, which will in turn bring down the cost of mining. Now, another big piece of FUD that comes up is e-waste, that mining rigs only last about 13 to 14 months. That's complete crap. For example, Riot Mining has been using S9s that they bought in 2016, 2017, and they donated them. They sold them to other operational environments. These rigs are 6 years old now in some cases, and they're still running strong. They may not be as power efficient or as processing efficient, but they're still being used. Then you have other FUD like 95% of energy is used in processing transactions. No, it's not. 95% of energy is used in minting new coins, not transactions. So the transactions are not inefficient. And then mining facilities. One of the key features that other types of things like data centers can't do is mining facilities can switch on and off to support grids. They have that capability, which means they can use a grid when they have excess energy and turn it off when the energy is needed for other things. There's also a whole bunch of areas where Bitcoin mining is used to solve environmental problems, like dealing with sulfur leaching out of coal or coal oxidizing, finding very clean ways to burn the coal, and again, power Bitcoin mining and reduce damage to the water table, etc. Also flare gas, which increases global warming. That can be used to power miners. They can drop little shacks outside these flare gas places and just power the mining for free and make the environment better. And remember, today 58% of all power is renewable. So that's kind of like a quick, short punch list, but there's nothing but goodness out there. Now, the other thing that's kind of fun to look at is a perspective. And if you look at the amount of energy that Bitcoin mining uses in comparison to things like the military-industrial complex of the United States, it is a fraction of a percent. It's tiny. But if you look at some other things like global banking systems, again, it's a fraction. Gold mining, it's a fraction. Video gaming, it's less. Fiat currency printing, that's a funny one. But you can see even fiat currency printing uses quite a lot of energy. The same amount as US Christmas lights. So again, and this doesn't even take into account the crazy stuff like air conditioning in the United States. Air conditioning in Texas in the summer or Arizona uses far more than Bitcoin mining. So just, again, it's not a concern. And as the asset increases, the mining, the rigs, the processing, the energy production, the energy innovation that's happening around Bitcoin mining, it's helping the world in a very positive way. And all of the best minds in the world are behind this as well. Think Cathie Wood from ARK. Think Michael Saylor, Nick Carter, all the people that know what's going on. So next question. This is one as an interesting one that I ponder a lot. MicroStrategy is in a weird situation. This one's from Anonymous. If MicroStrategy is undervalued, would shorting Bitcoin and going long MicroStrategy be a viable strategy? So interesting play. And yes, let's examine first of all how we are in a little bit of this mess already from a previous arbitrage trade, and that was called the GBTC arbitrage trade. And let me walk you through that very quickly. So in the past, what hedge funds would do, they'd borrow Bitcoin from places like Celsius and Nexo and others. Then they would subscribe to GBTC for a 6-month lockup period. And when the lockup expires, they would sell their GBTC shares to retail investors like yourselves for a hefty premium. And that was the arb play. You borrow Bitcoin, lock it up for 6 months, sell shares at a big premium. Boom, win, win, win. Now, then they could use the proceeds to pay back the lender for the borrowed coins and pocket the difference. So this brought about a lot of the arbitrage trade. So if you look back here, even at the beginning of 2021, it was selling at a bit of a premium, but that went away very quickly once things kind of slowed down. So can you do things like short Bitcoin, long GBTC? Yes, especially with the current discount we have right now, north of 25%. Now, the real question you asked is regarding MicroStrategy. Now, this is the one that really kind of confused me. We'll talk a little bit about an old adage after this in a second. But year over year, over the last 365 days, Bitcoin's up about 10%. MicroStrategy is down 45%. And MicroStrategy is trading at 82% of the current value of the Bitcoin on their books. So again, it's irrational, it's illogical, and it shows you investing is risky. But let's look at some of the numbers here. So here, another way of looking at it, the Bitcoin on the books is worth 135% of the actual trading market cap. And per our models, the theoretical floor price for MicroStrategy should be about 530. We're way below that right now. And the roof price should be about 574. That takes into account convertible debt, liquidation from convertible debt, etc. down the line. So again, it is extremely undervalued, but the market is irrational. And this brings in this great quote here. Remember, markets can remain irrational a lot longer than you and I can remain solvent. That's from John Maynard Keynes. So gravity always wins eventually. It'll come back, like GBTC will come back. I do believe GBTC will be converted to a spot ETF this year. And I also believe MicroStrategy will rebound. You just be patient. But yeah, that strategy would work. But be careful how you do it as well. Remember, when you buy options or you go into derivative positions, they actually have a premium associated with them. So make sure you can cover that cost too. All right, next question. What are your exit price targets for LUNA from Miro? So LUNA had some interesting news this week, as you guys all know. And LUNA risk, I always said, it's a super fascinating thing. It could really explode if it becomes the currency of all things DeFi. But it comes with a lot of risk. Not only regulatory risk, US government might be looking to find a way to clamp down on stablecoins, but also this risk here. This is an article called Terra LUNA this week being tied to the Wonderland controversy. And this all goes back to history. Is apparently a guy called Zach exposed a core member of the Wonderland project to be a guy called Michael Patron who was involved. He was the co-founder of Quadriga, something out of Canada, and it was shut down in 2019 after apparently lost access to his funds, but apparently it's a huge rug pull scam type of thing. So the fact that Terra is stuck in this mess because the stablecoin UST can be staked and lent out in this Wonderland project. And that's why it's all kind of coming down, all becoming tainted altogether. So this is part of what stablecoin risk is, and this is what you need to be careful of. And I think a lot of people are learning this year that, there's newcomers coming into the crypto game last year thinking, oh, investing is easy. I'm only interested in 100x returns. They're very quickly learning in 2022, investing is not easy. It's extremely hard. And unless you're very careful, you can lose. So let's talk about my LUNA strategy. First of all, another little lesson here. It's very important. I think a lot of the questions today surround the difference between investing and trading. Okay. When I invest in assets, they are things that I want to keep long-term. Think Bitcoin, think Tesla, think Google. These are long-term bags, perpetual bags, perhaps. Who knows? Then trading is stuff that you get in and get out of. You speculate on. LUNA falls into that category for me. So always think also in terms of capital preservation first, and alpha, which is excess return second, and I'll probably exit part of my bag at $98. I did buy a little bit yesterday, the day before, I can't remember, on the dip, just to lower my cost average to about 55 right now. So the layering out model will come soon, but we'll see. We'll monitor things carefully and see how this goes. I'm pretty confident that Luna will shake this off, but sometimes you got to really, when these bad things happen, assess the news, see if it really is oversold. If so, then consider layering in more. We'll talk more about that too in a minute. So, to stake or not to stake? That is the question from Carlos. In a financial crisis, will my staked coins still be there? When I stake, they are not my coins and I can't switch to a faster horse. So brilliant question. And let's talk about how I perceive staking risks to be. One of the reasons I don't stake everything that I have. Number one is the $1 million question, first of all. When I list out all these risks, is the 5% or 8% or 10% return worth these different types of risks here? That's the question you need to ask yourself. For me, it's not. Again, I'm about capital preservation first. Like yesterday, for example, I got rid of the last of my ever stake because that's where I stake part of my Solana. That's like half of 20% of my Solana stake there. I got rid of it yesterday because they're based in Kiev in the Ukraine, and I'm nervous about that. Maybe paranoid, but I'd rather be safe. So first of all, you have counterparty risk, which you identified. Then you've got your market risk. So that means there could be adverse price movement and you're not able to get out of a position. Just like we saw a big adverse price movement, for example, with Luna. Then you have your lock-in risk, your lock-up period. We'll talk about this more, but sometimes I'm very hesitant to lock anything up, even for more than 48 hours, can you believe? And there's some people that are fine locking stuff away for 3 months or 6 months. That's not my style. Then you have your liquidity risk, for example, hard to sell assets like XRP. Then you have your shell game. So for example, sometimes you get tokens that pay very high APY, but the return on the asset is down 50% a year. But you might be getting 15% return when it falls by half every year. And again, you're losing 35%. Then you have your validator risk. They have uptime and slashing risks they're exposed to. Then you have the fees, the validator commission and fees that are taken away. And then you could have loss or theft. So there is a lot of risk to staking. The fact you spoke about things like a market crash, I don't think that's as big a one as some of these other areas. So I think you're safe there. But do take all of this into account. And I like to stake no more than a third of any one bag. And I spread it around at different places where I stake to minimize some of these risks as well. Just the way I handle it. So next question is from Anonymous. This one is, what is your overall sentiment on buying March 2023 leaps right now? So good, interesting question. A lot of stuff going on that makes me think about this market a little bit different. There's a lot of unknowns in 2022. We knew that in December 2021, and they're all panning out. Sometimes a little worse than expected in some cases. So if I'm looking at leaps, I make sure I'm now going out to January 2024, because when you go to early 2023, basically you're just wrapping around the corner of 2022, so it doesn't give you a lot of extra time. So now I'm only buying leaps out to 2024. That's where I play. Make sure you have some intrinsic value in those leaps as well. Now, that's a sure thing. I do think, as I mentioned before, because the midterm elections in the US will have a lot of choppiness going out to November, and therefore it could be a flat or to some extent a lost year as we go forward. Next question is from OverUnity. As overall market trend blows previous sniping targets away, wouldn't slowly DCAing in be as effective rather than worrying about getting a snipe price filled? So let's look at a case in point for me. I put this together. This is actual data of all the accumulation prices of how I layered into a certain asset with an average cost basis. So it's representative of a token that will remain nameless of how I layered in. I think somebody will be able to figure out what it is. But the blue on the left is the total number of units that I bought. And then on the right is kind of the average price of all of those units together, not the price of each layer that was purchased. But the key takeaway here is obviously it's important to get in early and get in hard. This has a dramatic impact on your APP, your average purchase price. But I found that very careful sniping, and this is what people forget, position sizing is extremely important, and it helps me add to my stack while not blowing my cost basis. Now, the higher the asset actually goes in terms of price, the less I invest. The further it falls, the more I buy, as long as my thesis remains intact. So if you look at this chart again very carefully, you'll see the blue lines are the total units that I've been aggregating and how they've gone up. They were kind of flat for a while. That's because the price of the asset was actually really high for a while. I was still layering in, but very small. But as it began to fall again, I layered in harder. So you can see the total number of units increasing. So the first 2 buys, 3 buys, it kind of went up. The next 6, 7, 8 buys, flat. And then the last 4 buys, up a lot. But the average price is still under 60. That's how I do it. Now, if you guys are interested in more of a detailed model as to how I allocate capital, position sizing, how I snipe, I can do a redo of my DCAing steroids for multiple assets. Let me know. Just came to me now. I should probably redo that again because I think it's a very, very important skill to have. Next piece of advice, financial advice from David Sachs. And I love this. Sometimes people overthink things. And I think the best stuff is the most logical stuff. And he tweeted this: when exit prices are great, the entry prices are lousy. And when entry prices are great, exit prices are lousy. Everybody should just stick that on the mirror and think about it. Real simple. If you just, and I remember watching this tweet and I was like thinking about it for about 2 days. And I was like, everybody needs to know this. So just sharing. It's a good one. So next question is related to the previous question from Diane. Late to the Solana party. I've been trying to accumulate the 300 coins. Should I focus on BTC instead, especially now it's so cheap and rare? So the way I think everybody should think about this is the real question, as I call it. Who is going back to the all-time highs, and what is the probability that they're going back, and what is the return when they get back there? So using this framework, put together this little table. I have some chosen names: Phantom, Bitcoin, Ethereum, Luna, Solana, Cardano, Polkadot, Chainlink, and I threw in ICP for giggles, just for a laugh. And when you kind of pick your names, it's very, very important 2022 to be in the right names because they have the shot of doing something this year. So for example, if you go into Bitcoin, that has a very high chance of hitting a new all-time high. Getting back to the all-time high will give you an 80.6% return on investment from where the price is right now. Phantom, going back to the all-time high, will only give you 66% return. Solana, going back to the all-time high, will give you 174% return. Remember, and people kind of sometimes forget this, Solana went up over 100x in 2021, and for it to retrace, this amount, 60%, 65%, is not abnormal for high flyers before it takes the next run. And I do believe it will take a next run, as many other names will too. So that's what you need to look at it, is which ones are going to go back to at least their all-time high, not break new all-time highs, and what is the return you get from that, and what's the probability, and then put it on a spreadsheet and calculate your probabilities and your expected values. I do believe, again, Bitcoin is the safest asset, but you can get much more return getting into other assets that will hit their all-time highs again. I'm pretty convinced. Then you have some names too as well. Let's not forget ICP here, for example. It's down 97% from its all-time high. If it does get back to its all-time high, you'll make 2,400%. But is it going there? I don't think so. So be very careful, everybody. Quality first. And I hope I didn't make anybody irate. I was always not a fan of ICP all last year. Everybody thought, oh, it's half off, we should buy it. I said, nope. Oh, it's 80% off, we should buy it. Nope. 90% off, we should buy it. Nope. 97% off, should we buy it? Nope. It's just, yeah. You know, when you live through things like 1999, you see how these things end up panning out. So next question from Olivier. 15 years ago, I was talked into putting $120,000 in an AXA Accumulator Variable Annuity. Look at that fancy name. It sounds fast and good, doesn't it? The surrender value of 160K. The roll-up benefit was 260K, not a cash value. At 54, I'm concerned about long-term inflation and a potentially very large erosion in purchasing power when I started getting monthly payments. Should I forego whatever I accumulated in 15 years, cash out, try cut my losses and seek a better ROI, or stick with it after this much time? That is a hard question, and sometimes people get stuck in a hole and they can't get themselves out. But sometimes it takes a lot of bravery to dig yourself out and just start all over again. So let's analyze some numbers. But before I do that, I'll talk about why I think annuities suck. They're long-term contracts. I don't like committing to anything long-term unless it has a name like Tesla or Google or Bitcoin. Second, penalties if you cashed in too early. They lock you in. I don't like losing flexibility. Third, you lose control over your investment entirely. Fourth, annuities earn little or no interest. And fifth, guaranteed income cannot keep up with inflation. The reason, if you look at annuity businesses, take any annuity company like AXA or other people that are selling them, 60% or 40% of all of their expenses is sales and marketing. They sell the shit out of this stuff to trick people so they can profit off your money and give you crumbs back. This is criminal behavior, in my opinion. So, especially with inflation of 15%. Sorry about whoever talks you into that. So let's look at this. So I calculated the rate on your annuity is about 2%. Given you've had 120 grand in for 15 years, that brings it to about 161,504.2 at exactly that 2%. But remember, the problem we have is not... I could go back and analyze how much you've actually lost in purchasing power over the last 15 years, but it's too depressing. So instead, I'm going to look forward to the next 10 years. What would happen if you kept it for another 10 years? Which is your option. The sad news is, based on the current inflation environment, and you would liquidate it in 2031, your 160K would become a purchasing power of about $78,174. So nearly, basically half. And that's the sad truth of loss of purchasing power. It's just being eroded away, the melting ice cube. And that's criminal. So, what happens if you bite the bullet? Try cash it in now. What could you do? Well, if you can pull out that 160K, you could buy 4.32 Bitcoin today. In 2031, if Bitcoin, I'm pretty convinced it'll be $1 million. Worst case, 800,000. You will have about $4.32 million, maybe 3.9 million, something like that. The real purchasing power of 4.32 million in the year 2031 will be about 2.091 million, which is 27 times higher than keeping your annuity. So yeah, bite the bullet, not financial advice. Get out, stick it on a faster horse, and don't let it just shrivel away. You're losing on annuities, just like bonds. So sorry about that. And stay strong, Olivier. Thinking of you. So Jelly Bean. I'm a very bad day trader. Sometimes I can't resist FOMOing into pumping coins and selling in panic later. How do you learn to exercise and restraint in this? Great question. So let's talk about first things first. And I did a video early last year about the personality type. Step number one is know your personality type. Okay. So there are different personality types who 80% of the time make very, very good investors, like INTJs. Very good investors. If you have an F or P in your personality type, you will not make a good investor. But I'll leave a link to that video in the description below. Check it out if you haven't already. It's very important to know who you are, so you know how to play the game. Second thing, you need to fight the lizard brain. We all have it, but we need to fight it. And what you are describing is the amygdala, which is used for irrational decisions, like failing to execute buys or sells. Sometimes people are afraid to buy something because it's too expensive, or they're afraid to sell because they've lost too much money. And that that is kind of like the emotional instinct, the fear of admitting a loss or the fight or flight or whatever. It's really, really bad. So it hates losing money, and it helps our ability to survive in the model world, but it's also extremely bad for investing. So be very careful there. So what I do urge you to do is, obviously, first step, find your personality type, get a system, and do paper trading to make sure you get to 90% win rate before you do it for real. And then get some type of discipline in place that allows you only to trade once per week. So, for example, you could tie your exchange account to your YubiKey, give it to your husband or wife, and say, hey, don't give this back to me for another week. I made my trade already for the week. I remember years and years ago in business meetings, somebody told me you could only, in any meeting, if it's an hour-long meeting, control yourself to only speak 3 times. But every time you speak, it has a lot of heft and impact. So the way you do that is you hold 3 stones in your pocket, or 3 coins or whatever. And each time you say something, move 1 coin from one pocket to the other. And then you know how many trades you have left, how many times you can open your mouth. And that's an important discipline as you go forward. So I hope this helps. Now, again, bring it up. Financial advice. David Sachs again, just like we said before. When exit prices are great, entry prices are lousy. Entry prices are great, exit prices are lousy. It's so simple. Just stick that on your mirror in your bathroom, and that'll help a lot too. So quick follow-up from the question from 2 weeks ago from Simon W, who needed a more accessible platform, decentralized exchange using Gaze technology. So we looked at a ton of platforms. We have discovered the best decentralized exchange is DyDx. And this is a screenshot of it blown up. You know, I can blow it up even bigger than this, but it was really, really easy to use on extremely high resolution. And it's a very powerful platform too for derivatives trading. And the other one as well is FTX. There's a code below for that where you can save 10% on trades. It does the same thing. You can blow it up to just about the same amount of levels. So let us know how that goes. Give it a whirl. Just you can jump on there and you can actually paper trade with it and see how it goes and let us know. And finally, the great news of the week. Big thank you as well to all the super chats and donations. We are helping fund a homeless animal rescue team in Ireland. The donation is sent in remembrance of Allie. And she's a 4-year-old rescue greyhound who loves cuddles and walks with her doggy friends. So a big thank you to that. And let's go to some questions. Right now, we switch cameras. And a big thank you to the moderators out there on the chat too. Okay, remember to read slowly. This is from Antonio Schwalt. Could you do a shallow dive on Flux, formerly Zcash? I hope that's not Zcash. I think decentralized AWS has a partnership with NVIDIA. Anything to gamble or just garbage? Let me have a look. I think Flux rings a bell. And I'll be able to tell you very quickly. Let me pull up 2 different sources right now. Hang on a sec. It's hard to stand and type. Flux protocol. There's so many fluxes. My goodness, there's 4 of them. I can't even find which one it is. Let me see. I'm going to try another source here, because when there's 4, you don't know which one's which. Yeah, there's Dynamine Flux and there's Flux. One is ranked number 2087. The other one is ranked number 152. I'm sure it's number 152. That must be it, the distributed computing one. Flux. Give me 1 second. Here we go back now. Dynamine Flux. Charts. Metrics. Boom. Yeah, there's just not enough data for me to analyze in terms of ownership, centralization, decentralization, inflation, tokenomics. Antonio, sorry about that. I will have a quick look later. And there's so many fluxes. There's like a gaming ecosystem. There's a mining system. I think anyway, dabbling anything outside the top 200, top 300 in 2022 is absolutely playing with fire. I said last year it was. This year it totally is. So I'll have a quick look later, but it doesn't look good right now. And also, when things rebrand themselves, it means they're trying to get away from something. So be very careful when things rebrand themselves, like Meta rebranding from Facebook. It's a red flag. Block rebranding from Square, a good flag. So no, it doesn't always hold, of course. Let me see. Scoobs, could you explain your plan on hedging Bitcoin and how you would go about it? Not financial advice, just maximize my whole corner status. Yeah, I've covered that a bunch of times. Last week, actually, in the Q&A, I talked about my different methods to hedge. The collars and everything else. So check out that video. It takes too much time to explain. I can't do it justice probably. But what I will be doing is showing you guys some tools over time. But again, we're not in a hedging type place right now, unless of course Bitcoin shoots to 70K, then we are. But right now I think we're going to be fine for a while. But check out my video last week. I talk in detail about that. GWash, if you had 2 Bitcoin in a crypto IRA and you could roll over another 50K, would you buy more Bitcoin, buy ETH SOL instead, or leave in a low risk 401k, hold until 2028? If you have a crypto IRA, it gives you the options to buy other assets. Again, whether it's in an IRA or not, I think it's important to have 65% of your bag, of your crypto risk bag, in Bitcoin and 35% in other assets. And of that 35%, about 30% should be in really, really good assets. Think Solana, maybe some Ethereum. Luna just got dinged, so I think it'll come back, but that's a very risky one. I think Phantom, a little bit of Phantom, that'd be one of your, maybe your 5% holdings could be there. So if you don't have any other assets, I would definitely diversify. It wouldn't just be pure Bitcoin. You got your 2, great work there. Keep it secure, and think about your balance of other positions. And I do think the next 3 to 5 years will be extremely transitive for the layer ones, and finding the layer one that wins will be a game changer, because all roads will lead to that. And that's what we focus heavily here on trying to identify. Let me see. Cryptolicious, what gives? Exactly. It's completely irrational. As I covered in that, it's like, why not just liquidate the company? Why does somebody just not just buy MicroStrategy and take their Bitcoin? I mean, it's like buying Bitcoin at 35% off. It's stupidity. Now I realize it's happening because of concerns and FUD about gap accounting, etc., etc. But why base investment decisions on accounting rules that are 30 years old and completely out of date? So that's kind of the concern. I do believe gravity will ultimately win. Cream will float to the top. So hold tight for that. But just remember, be patient. But it is crazy, absolutely crazy. What were the stats I mentioned? Bitcoin's up 10% in the last 365 days, and MicroStrategy is down 40%. That just doesn't make any sense whatsoever. And they added 50,000 more Bitcoin since over the last year, so it's nuts. Master Block Warrior, long time no see, buddy. How long do you think the final leg of the bull run can be delayed? Right now, based on the lengthening cycles, if you look at the video I did, I think it was Thursday or Friday last week. This week, it's all a blur. Everything's a blur this week. I don't know why. But I did talk about that new run per Dan Hell's paper. Could be as much as 1,400 days, which will take us to December 2022. So hang tight for that. I think it's going to be a choppy year and a gradual chip up. In fact, looking at the price action over the last couple of days, we just tanked all the way down to 37.5. But, I knew we'd hit a lot of resistance at 39K. It's going to be hard to break through 39K. But it's not selling off. So right now we're back at the levels not seen since yesterday. 37.5. Like, it's tight. And the whales are accumulating again, which is really, really good. Volume is picking up ever so slightly. So hold tight. I think it's just, as I said, Q1 turned into a quarter now where we're in a hovering mode because of the lack of clarity, what's coming from the Fed, geopolitical situations, etc. So this is a time where sock cash away and be prepared to buy dips. I'm sitting on a lot of cash, waiting. I'm not deploying big now. I'm just nibbling and waiting, because I believe we might still get that capitulation event where everything just goes, okay, it's the end of the world, guys. That's what I enjoy. That's what I'm waiting for. We may not get it, but in the meantime, I will nibble away slowly. Like if we see Tesla anywhere under $800, that's where I will deploy hard. And I'm already irresponsibly long Tesla. So let me see. Solomon the Holder. Any update on Polkadot? And will Feb be a good month? I'm lucky to catch time stream at 1 a.m. India time. Good to see you there, Solomon, in India. I hope I don't keep you too late. Polkadot has been one of the disasters of 2021. Never went anywhere. I think everybody had so much hope about parachains and interchain connectivity, and they had a leading role. But now with things like Wormhole from Solana, they don't have that special edge anymore. We will be digging into DOT versus the rest of the world to see if there's any hope, and we'll be able to give you an assessment if they have a chance going forward. Right now, the way the price action is indicating, it doesn't. So I don't want to call it a ghost chain like some others that we know, but we'll see. It's just not looking good, especially from the price action. Rock Dogs. Is there an emerging disruptive industry gaining your attention? Yeah, it's as I tweeted last night with Hey Dave, it's the combination of S-curves, anything that has multiple S-curves hitting at the same time. So for example, utility, energy storage, autonomous vehicles, robotaxis, all that type of stuff. Think Tesla, moat from hell. That is absolutely has gained my attention for many years and continues to do so. And their ability to execute is scary. Their AI investments with their robot, that would be both incredible, also bring about a very scary time, because, one of the things that concerns me, if you look at what they are developing, that will destroy so many jobs for so many people. It will be shocking. And I know they say, Elon Musk will say, yeah, well, they can be repurposed to do other things. They can program the AI that controls the robots. It's like, yeah, but what happens if they don't have the AI programming skills, which I know they don't. That's why they're working in a factory in the first place. That's the issue. So it is very, very concerning for me going forward. But yeah, again, Google, Tesla, AI, robots, Tesla, blockchain, Tesla, that it all circles back, and that's exactly what I look for. And these things sometimes don't pop when you think they're going to pop. Sometimes they take longer to pop. Like if you take some of the S curves that are colliding within the biotech place, 2021 was a lost year. 2022 isn't looking any better, but that will hit, and that's when you need to be positioned. We just don't know when that tipping point is. John Dill. I'm considering building my position in a Toronto fintech DeFi technologies. Have you looked into them? Ticker DeFi. Let me have a quick look. I do have a little model up that pulls in data from public data and calculate some ratios. Give me a second. DeFi. Yes, from Toronto. Oh, yeah. Hang on. Let me just pull these numbers in and have a quick look. Oh, good Lord. Heavily unprofitable. Earnings crashing. Yeah. No sign of profitability. No, not something I would touch. No, I like things that have extreme earnings growth. Earnings growth. I have to have earnings growth or line of sight to earnings growth. I don't see that. I'm afraid, John. Yeah, this is not something I would touch. Like, well, why invest in DeFi when you know Tesla's a sure thing? I always talk about the black holes that eat everything, or just buy Amazon or Shopify. Far less risk than this. So, but just the financial numbers, ratios give me a lot of concern right now. Jeremiah Johnson, in your NFA opinion, do you still think quarter of Bitcoin goal is still best for most individuals? Getting the original number was 0.22 Bitcoin. I think we may have rounded up to a quarter, but that puts you in rarefied territory against the rest of the world. And if at all possible, getting one whole Bitcoin will be life-changing 8 years from now for everybody. So definitely, everybody needs Bitcoin, and the adoption that's happening is so exciting. It's the game theory, even within the politicians in the US, just over the last couple of days. Arizona, they're going to make Bitcoin legal tender, or they're going to try. And then some other state announced today they're going to do it, some senators. So you got all these politicians. They're desperate for something to define their careers and differentiate them from the rest of the posse. So you got the cool mayors in Miami and New York, and you got the cool leaders in Texas. They're all embracing Bitcoin. And then you have the rest of the world, and you got, so I think, I'm super, super, super bullish. I get more bullish on Bitcoin every day, if that's even possible. So with that, thank you for donation, everybody. From Capono, Justice for All, Playing with Pastels, Benny Holick, and I know there's probably some more, just waiting for that text to come in. And so good to be 100% again. Thank you. Sorry for any coughs during the week, but I'm better. And chicken-wise, thank you. House of Woodley's Sleepless Kryptonian, Angel, the Wolfman, Trash Pandas Rock, G-Wash, and Douchepesh. Thank you all for being here. Appreciate you all, and I'll see you Monday. Have a great weekend.